We had another one of those exceptionally boring weekends in crypto where nothing happens. Or we had Donald Trump go on Truth Social and say that there's going to be a strategic crypto reserve, including assets like XRP, Cardano, Solana, and then, oh, by the way, in a tweet a little bit later, we'll also probably have Ethereum and Bitcoin. If you had any doubt that Donald Trump's actions and words control the crypto market, then think again. What he does pumps and dumps the market back and forth for better or for worse, even in the face of macro, which is our conversation every Monday. I cannot wait to have this talk with Mike, Dave, and James here on Macro Monday. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and hit that like button. Going to bring on the gentlemen right now. We've got Dave, James, and Mike. Not a boring weekend. We love our Sunday news, but I'm going to first give us a table setting here and go to Mike, who is in Bill Barheit's living room. It's my favorite background that Bill Barheit always uses with the piano. And break down what happened in the morning meeting just to sort of give us some context for our conversation.
So I'm in the great state of Indiana this week. I'm going to the all-day Ag Outlook tomorrow. It's the best conference on the planet. The food, it costs $40 and food's worth $50. But the key thing about the morning meeting is significant, and I'm glad we're starting there, is our two chief strategists, our female strategists, I have nothing but the most respect for. Anna Wong and Gina Martin Adams just came out swinging. So if you're bullish risk assets, you probably should listen to them. Anna thinks the non-farm payroll number is going to shoot to around 65, and the shock risk is it's going to be weak. Her key reasons were bad weather, expiration of pandemic stimulus, and Trump's funding squeeze. She's pointing out that the states are forecasting 6% funding reduction. This is typically a time of year you build payrolls. But she's pointed out big drag on payrolls, Fed funding potentially decreasing in the states, could be a massive negative number for payrolls. You know, it was 2 months ago, she nailed it. So I'm honest swinging hard that we're going to have a weak payrolls number and might last a little while. At the same time, Gina Martin Adams, who's been, again, in my, I just followed her general direction, having nailed this stock market rally for years, says sentiment is too exuberant. It's maniac, earnings working against the cycle. 2024 have been marked peak earnings, too much earning optimism. The Mag 7 lost all leadership. Only Meta is still hanging in there. Home builders are breaking down. Consumer sentiment's turning downward. We're losing cyclical momentum, and only the financials are powering forward. So from the morning meeting, quite the bearish outlook from a U.S. economic expansion standpoint. And I'll just put my view in is I think it's an example of the extreme optimism of the return of President Trump to the presidency is turning over into just a normalization, the realization that the world's largest demand pull money printing machine on the planet's cutting back significantly. Expect some discombobulation in risk assets.
Yeah, the fiscal.
What about these guys though?
Fiscal dominance.
Ahead,
the fiscal dominance has ended, right? So they're just not spending hand over fist out of DC anymore. When we saw if you look back at all the hiring numbers, the jobs numbers for the last 2 years, there were massive amounts of those numbers are coming out of the government, right? The huge percentage of the hiring was coming out of the government. So it's a big deal, and I think Anna's right in that we're going to see a couple of surprises out of this. The question is what's on the other side of it, and whether we can have deregulation and unrestricting companies to hire and expand their own balance sheets. If that's going to be some sort of offset, it's going to take some time though.
Yeah, before we move on to Dave and to other topics, I mean, Mike, I just showed this, but Z prepares to unveil China's stimulus plan as trade war heats up, saying they're still going to be repeating it. The bullish growth goal of about 5%. Good luck. And of course, Trump's ever-rising tariffs will challenge the impact of this stimulus. But we may be in a period of pseudo-austerity here with Doge in the United States, but China is about to print like never before.
So they have. I'm glad you brought that up. That's a key thing to remember about China. You have to expect massively increasing fiscal and monetary stimulus just for risk assets and markets in that country to just remain stable. So those of us remember trading JGBs, Japanese government bonds, 30 years ago when they were collapsing, and everybody says, "Oh, they're bottoming." I've seen this before. 1.77% on that Chinese 10-year note yield. China's collapsing. Now you're seeing the only reason they're staying upward is because they're still able to export a little bit and massive fiscal monetary stimulus, but you have to depend on it. And now who are they going to export to? We have Germany's pretty like third year now heading towards recession, UK heading towards recession, US is cutting it off. This fortress North America that Scott Bassett mentioned with China, with the US, Canada, and Mexico all ratcheting up exports in China. Let's not underestimate what's happening in this country. And then I just enjoyed what I've learned from some people, really, from my colleagues pointed out, by the way, we have a country of only children, they're only children, and the population is declining. There's a little bit of a psychology there that's just very negative. And all I hear is about hoarding and saving as much as possible. They have to stimulate just to stimulate. So, and I look at that and I also point out from a commodity standpoint, you have to depend on China's stimulus. You have to depend on more cuts from OPEC. You have to depend on less supply in terms of crude oil and grains and stuff from the U.S. Otherwise, we're going to get what commodities normally go lower. And I have to tilt over to what I know best. I see pretty significant deflationary forces kicking in, particularly if the U.S. stock market just has, maybe it gets to that 200-day moving average, which Bitcoin did last week. It was a perfect technical little backup.
I do have to say, listen, we had the debate many times, Mike, and we kept saying, why not Ethereum 2000?
There we go.
We got Ethereum 2000. Pretty damn close. So yeah, we did get 200 MA on Bitcoin on the daily chart. One of the craziest weekly candles you'll ever have. I think we opened the week at 96,000, dropped as low as 78,000, so an $18,000 spread, and closed right back at 94,000. If you literally fell on your head last Sunday and woke up yesterday, you wouldn't know that there was any volatility in Bitcoin. You had basically almost a $20,000 candle and opened and closed within $2,000. I mean, Dave, insanity.
I mean, I want to comment on the week, and I want to talk about the fact that it is not priced in what happened yesterday. It's not even close. But I think it really needs some commentary on what Mike and James just said. So first, the majority of what Mike's strategist, the Bloomberg strategist, is saying, I agree with. I think the economy is going to be weak and going to sustain weakness. I think that in the trenches, people need to understand how the Musk stuff and the Trump stuff is being portrayed by the actual people in the government and how the states are reacting. And that is significantly larger than most people think. So we have a family friend whose son was over a year into his 2-year FBI training as an agent. His managers, because he was on probation, his managers said, well, all people on probation are at risk. And therefore, if you hit the resign button, you don't have to pay us back the $55,000 that you'd be getting, that you would ordinarily have to pay back if you quit while we're training you, because they put a lot of effort into training agents, and you'll get paid through September. But if you don't, and we fire you, you get nothing. Meanwhile, he has expenses, etc. So he hit the resign button. Now, I am very confident that Elon Musk's idea was not to take highly trained, expensive people who they're going to want and have them be gone. But that is exactly how it's gotten implemented. So all the people who are being trained throughout the federal government for technical and other jobs, there's going to be a massive shortage. They're going to be rushing to hire these people back in a little while because it's what they actually want. But the amount of money that's going to come out of people and the amount of job losses are going to be severe. That said, when you, at the end of the day, and the dust clears, you're going to have a situation where you have significantly less drag on the economy. Because the other thing that is very true is economies, what's the biggest drag on any economy of spending? It's called fraud. So we have a lot of money. And if you listen to what Elon was talking about over the weekend in terms of the NGO fraud, anyone who's listened to Mike Benz over time knows that billions, we're talking hundreds of billions of dollars, have been getting stolen to go to a lot of it ending up in politicians and politicians' families' hands. That money is all going to get deployed for productive use. And that is a very big deal, because the one thing this administration does not want is they do not want to, bring down the economy. What they want to do is deregulate and have private hiring, but they're not necessarily talking about a budget that's a decrease in the deficit. It's just not true. So you're going to see this. Now, at the same time, the Fed is going to have every opportunity to say, oh, wait a minute, look at all this weakness. And so I euphemistically would be joking, printer is coming. James may be saying fiscal dominance is ending. That's absolutely not true. There's no projection of a balanced budget without something around 10% growth, right? Which we're not going to.
What I meant was that the fiscal driving of the U.S. economy is kind of ending. So we're going to, it's going to have to be picked up somewhere. And that may be just an added liquidity, but we know that Trump he's not going to stand for the market to fall on his watch. He's going to do whatever he can to juice the market, because he looks at the stock market. He talks about the stock market almost every single day of his administration. It's a level of his, it's kind of a measure of his ego.
Well, I mean, yes, although I think that they understand that there's going to be a step back before you get a step forward. My point is,
exactly,
we're talking this show. Let's face it, our audience is mostly crypto. And so I've been talking about what could cause Bitcoin and crypto to delink from the absurd earnings expectations of the stock market since we started this show. And I'm basically laying out a thesis that it is going to delink in 2025. That is really what I think. And I think, and when I say crypto, I do not include memes. I do not include bullshit.
Dave,
and we'll talk about that.
Sorry.
Mm-hmm.
I don't mean to interrupt, but when you have a $18,000 Bitcoin candle spread, altcoins having 60 to 70% volatility downside and back up, aren't we delinked? That didn't happen in the stock market last time.
No, well, that's kind of my point. My point is a lot of the action is delinked, but let's understand, and we're going to get into it later, price drivers. When you have news over the weekend, then the dominant price setters are the speculators, the leverage speculators in the Bitcoin market. The dominant price setters in about 15 minutes in Bitcoin for the rest of the day are going to be institutional flows, because that's what's been the dominant price setter for all. And there's going to be institutional flows into Solana and XRP and maybe even Cardano. And we'll talk about that. But I just, on the macro side, I just want to lay out my macro thesis. My macro thesis is that the stock market, which depends at the end of the day, has to depend upon earnings, right? Are these companies, the big companies, going to be the biggest beneficiaries of Trump? And the answer to that is a resounding no. Because deregulation helps level the playing field and creates disruption, innovation, and allows competition. And so to assume that the largest company, the so-called Mag 7, are going to be the ones that make the most money out of what's going on is, I think, wrong. Now, these things take a lot of time. This is not a 1 week sort of thing, but you need to understand that the stock market writ large is different than the stock market under a financialized world where the only people who make money are the biggest companies. I mean, it really is that. If you look at what they're trying to do, they're trying to free innovation in AI. They're trying to they want American manufacturing. Who are the American manufacturers that benefit from a reboot of American manufacturers? Seriously, who? I mean, Mike, what companies, if Trump is going to figure out a way to reboot American manufacturing by working with states to effectively get rid of the enormous amount of red tape that makes it more expensive to create rolled steel in America than to ship coal and iron to Japan or China and have it returned back over the ocean back to us, which of course is absurd.
But we still need materials from those other countries. We live in a global world now.
I understand, but we're one of them. But we are one of the most, if not the most, self-sufficient natural resource countries in the world.
Most.
And so it's worth understanding. The point on all this is that when you invest, you have to understand what the drivers are. And I have a very strong inner bias to agree with Mike on the stock market, and I have a very strong inner bias to think that we are reaching a very interesting moment in the history of Bitcoin. And those two things are colliding. So let's just talk quickly about why this announcement is a big deal. I'm going to start with Eric Trump, because Eric Trump is crowing about how cool it was that.
Here you go.
Yeah, exactly. This is the tweet. Now, now let's think about this. It's like a fine wine. Let's kind of understand and appreciate the notes in this tweet. What is he actually saying? What he's basically saying is, isn't it cool that dad can manipulate the market, because the only people who are going to respond are the degens, who are going to, of course, be crazy in what they're doing. That's really what he's saying. This was designed for maximum market impact. And you have to appreciate what that means.
Just like launching a meme token on a Friday night.
It is that. It is also, however, very clear understanding that something that you and I have both said, and I've said this on the show multiple times. If one invests in a product and one trades a product without understanding that the single most powerful human being on the planet wants you to win or wants you to lose, you got a problem. You have to be cognizant of that. It's just like we always said, don't fight the Fed, right? Why? Well, because if the Fed pulls all the liquidity out of the stock market, everything's going to go down. If they throw a lot of liquidity in, it's going to go up. When you have the president of the United States wanting an asset class to do well as a barometer of his success, don't be on the other side of that trade. And that's something we've said before. And honestly, I don't really care about that so much as legitimizing the asset class in people who are willing to follow along. And so that's really what's happening here.
Yeah, there's so much to unpack here. Just so we don't take for granted that everybody actually knows what the news is. I'm assuming you don't live under rocks, but on Truth Social, Donald Trump basically, I don't know if you call it truthing or tweeting. I don't know what you do on Truth Social, but he basically announced that the U.S. crypto reserve will be coming. A lot of people mistook this for a new executive order, but to be clear, this is part of the original executive order on crypto. But in this case, he said crypto reserve for the first time ever, right? We had strategic asset stockpile. We had a Bitcoin mention. And he said XRP, Solana, and Cardano would be included. For those who aren't keeping up, David Sachs, very early investor in Solana, Charles Hoskinson, close to the administration now with ADA, and of course, Garlinghouse and Ripple giving a ton of money. So a lot of people pointing to those things as the reason we would have these three. He went on later to say, and of course, Bitcoin.
Yeah, David Sachs also said he sold everything, right? So
maybe he had. I mean, it's possible. So I'm just saying that's kind of driving the narrative behind why a lot of people are assuming that these are the assets. But to Dave's point, this happened on a Sunday. It's the first time we're really getting crypto reserve. And of course, it's sending Bitcoin maximalists into mental gymnastics to figure out why these other assets exist. You guys might not remember this, but I literally tweeted this over a month ago. Strong rumor. Don't shoot the messenger, but hearing it through reliable channels, the strategic stockpile they're discussing is Bitcoin and XRP, not a joke. I knew that because I saw the private chats of Bitcoin maximalists who were close to the administration freaking out and not talking about it publicly. But here we are, James. Like we have a crypto reserve.
Yeah, let's also add though that he followed up because of a lot of hate that he got immediately on that post. He followed up with another tweet that said that Bitcoin and Ethereum would be at the heart of the reserve.
Right. Which I think he just, listen, he doesn't like plan these things, but I think everyone's default was he was adding these to Bitcoin and Ethereum, or at least to Bitcoin, maybe not even Ethereum wasn't default. But the point is, listen, like I kind of tweeted this. Do you need a strategy for altcoins moving forward? It seems like a reasonable one is just buy whatever Trump talks about or whatever World Liberty Financial purchases. To the exact same reason Dave just said, right? If there's a personal incentive for these assets to go up. But I mean, James, listen, you're the closest to Bitcoin maximalists we have. Like, what do you think of these other assets being reserved? Listen, I love altcoins. I don't think any asset should be a reserve asset beyond Bitcoin. It makes no sense. We should just start adding tech stocks.
Exactly. So, the having other assets that are basically securities why wouldn't you put Apple in there? Why wouldn't you put NVIDIA in there? It's to me, it's not any different. And so the only digital asset that we have is Bitcoin. That's the one that is, it can't be manipulated. We all understand this on this show. It's funny because even Peter Schiff had tweeted about this yesterday, saying that, and I think that maximalists got this a little bit wrong too. They're like, "Oh, he's a Bitcoiner," because he said, "I understand the argument that Bitcoin is digital gold. Gold should be a strategic reserve asset. So the argument is that Bitcoin should be a strategic reserve asset. I understand that. I do not understand how there's any argument for any of the other alternative coins, like the altcoins or any of the other cryptocurrencies, to be included. And so, of course, a lot of Bitcoiners kind of seized on that tweet saying, he gets it. He's going to be a Bitcoiner. He does not get it. He's not going to be a Bitcoiner. I spoke with him privately for a while in the green room after a pretty heated debate down in New Orleans, and he has absolutely no interest in supporting Bitcoin in any way, shape, or form. He cannot stand it, but he understands the argument that we have for it. So just to be clear, that was something that developed yesterday. But yeah, and you know, in that way, I do believe that Bitcoin is digital gold 2.0 plus, and it's so much more than that, and it will become money. But the argument to include any of those other securities, it just doesn't make any sense to me. I agree.
Okay, first of all, they're not securities, so let's
right. Now, I'm you understand where I'm coming from.
No, I do. Look, let me do the other side.
Yeah.
I think I can't remember who it was, so I'm going to be paraphrasing, but there are a few interesting tweets. There was one. It might have been Nick. I don't know. Anyway, look, the argument is very simple, and I don't know. I'm not going to make any personal decisions on whether it's right or not, other than to say I don't fight things. I expected this. If one looked at my portfolio, one would understand that I expected this, because I have Solana and XRP as my next two biggest holdings. Ether is pretty far down the list for a bunch of reasons. I do with roughly a pari passu with Cardano, believe it or not, but that's how I've been positioned for a while. And so am I doing okay? Fine, whatever. Yesterday was a good day. Do I really care? No, because what has to happen is what happens in the future. But the argument is something that is important. Now, the argument is that layer ones that will get used for applications. Apple is an application, if you think about it. Layer ones that will get used for applications that will be fundamental in verticals going forward, that will be transformative, whether that be financial, whether that be art, whether that be real estate, whether that be, music, whatever. There's lots of verticals where people
digitalization or tokenization of anything, right? Yeah,
that's right. So if you listening to the Larry Finks of the world talk about tokenization of everything, and all of the systems in the Internet of Value are going to be using different base layers that are more, that win, then having stockpiles of those things might make sense. Now, do I think it's premature? Yes, I do, because there are no applications that have been built yet. Is this, attempting to kickstart that and give advantages to people who just happen to also be in the administration, around the administration, or whatever? Yes, but the concept of having, of owning that, in the same way we have everyone knows about the Strategic Petroleum Reserve, in the same way we have a Strategic Cheese Reserve, it could actually make sense. But it is what it is. I mean, if this is something that's going to happen, it needs to be built upon that. It's the same concept of, if someone said to you, you could own a piece of TCP/IP and have a tiny little toll every time someone uses the internet, would you own it? That's the argument. And whether you agree with it or not, that's the argument. It can't be just
but okay,
we don't know that TCP/IP is going to win in this argument. We don't know.
100%.
It's betting on 20 TCP. It's betting on 20 TCP/IPs and hoping you get the winner.
Exactly. That is correct. So that I completely agree with that, and I don't disagree with that even slightly. The point is but that is what we're facing, and that's the arguments. But when you look at it from a Bitcoin perspective, it's really it's far simpler. There are a couple of options for doing this. There are three different options for building a Bitcoin strategic reserve that might happen. Okay. The one that everyone focuses on, the US may buy some. Okay. I actually don't think that they will necessarily, but it doesn't matter. There are two
by the way, they would have to buy XRP. I don't think they have any.
Yeah, that's right. But there are
That's
two.
not, I don't think that's on the list of assets. One of these, it was either ADA or XRP, is not on the list, or Solana is not on the list of assets that they, have and would basically just be able to transfer over. So
That's
when
right.
it was just Bitcoin, there was the argument, which you're about to make, that we could just hold the Bitcoin that's already been
Nope, not going to make
confiscated.
that argument.
Now you got to, because now we got to buy it.
Okay, so there are two other ways they could acquire Bitcoin, right? And I'm fairly confident they're going to do both. Option number one is do what Texas is doing. You play a tax game. You say you can pay your taxes, and this, by the way, applies to Solana. This applies to XRP. This applies to Cardano. They're going to say you can pay your taxes in these four cryptos, and you don't have to pay capital gains on the disposition of that. So if you have appreciated crypto, you could pay it full. And there is tons of precedent for this, most notably the fact that if you donate to a charity, you can donate the full amount of it and get the full write-off. So we know that that's true. It is highly likely that that will be the compromise that comes out of all of this. And think about the implication of that, because that makes sense. That way the US government doesn't spend a penny of the deficit, and they don't lose anything. And oh, by the way, as this is happening, the prices will almost certainly be going higher. So that's number one. And I strongly suspect that that's what they're going to do, unless they're dumber than I think they are. And I think these are actually quite smart people who are the ones who are whispering.
Give us two, because I got to ask Mike a question in a minute.
Bitcoin, it applies. There was just a research paper out, but it's something that we already knew, peer reviewed, that pretty much is dispositive on the fact that Bitcoin mining is very useful for grid stabilization. One of the biggest pieces of infrastructure that this administration needs to start tackling, or we're in deep, deep trouble, is our national electric grid, which is in serious trouble and seriously under capacity, particularly if you wanted to do some of the stuff that Biden wanted to do. This should actually be bipartisan. How in God's name are we going to stabilize the electric grid without the federal government doing significant investments in electric grid infrastructures? And the most obvious one of that is for the federal government to push into Bitcoin mining. They have tons of extra data center space that's been built over the years. They have access to stranded energy, and they're going to be investing in the electric grids. I would expect to see Bitcoin mining being part of the governmental portfolios, even if because it's dual use sort of thing. And no one's talking about that, but the data is incredibly strong on this. Now, they don't want to compete with private industry. I understand that. So it might very well be public-private partnerships that will implement it. But you have to believe that proof of work mechanism for stabilizing grids is going to end up creating that entry point, just like the government of Bhutan. I'm not saying Bhutan is the leading edge here, but that their way of accumulating Bitcoin is via mining. I think that I would be really surprised if we don't see that.
But let's come back, and we got to hear from Mike, because we just keep running over each other here. But for everybody listening, there's paths that are very fast, and those are executive order paths. They can happen instantly. And then there are legislative paths, and they will take forever. And no matter how much, our current administration wants to railroad things through legislatively, it's not going to happen. I was talking to Senator Lummis about this in New York City just a couple of days ago, and the reality is that the vast majority of congressmen and senators, they don't understand what we're talking about here today. They have no idea. And the amount of education that's going to have to occur to get support and to get votes on something like the Bitcoin Act is going to take time. It's just reality. So
she ain't even close. They are not even close to getting this passed. You can tell it now in the words. You can tell it in the way this is being discussed. You can see it being rejected by the first 5 states that have had the opportunity to do it, while Lummis is still saying this is most likely to happen at the state level and not at the national level. So we have to just basically do it on the Trump executive order right now, to your point. But Mike, this is what I want to know. So you see this price action on Bitcoin, right, over a weekend, effectively, or even throughout this week, right? This massive correction, everybody calling for 70, new bear market, one tweet or truth, and we're back up to where we started, right? So how do you put that in context of focusing on macro and this being just another risk asset, but going to have so much volatility even within the context of basically nothing happening in the macro. It's hard to make an argument that, you know, what happened with copper this week was the reason that we saw this Bitcoin retracement, for example.
Right. The biggest bounces happen in bear markets. Bitcoin's unchanged on the year. I think, Dave, I say good luck, Dave. I think you're going to be fundamentally wrong that when the stock market goes down, things like Dogecoin and Shiba Inu are going to lop zeros off the valuation, all these things. To me, the cryptos markets are indicative of dot-com bubble, almost exactly peaked 25 years ago today. Yes, I enjoy these tweets from Trump. I'm glad they're picking winners. And there's only good news. There's only 34,000 listed in the coin market cap. It used to be 12 million. They changed that, I think, because people like me were making fun of it too much. How's history going to judge this, gentlemen? How's history going to judge this? It might be good in the short term, but our government, our president, who was smart enough to tilt and realize that, yes, this technology is awesome. Why is the Tether, the US dollar, the number one trade of crypto today at 166 billion on a one-day basis of trading? Because the technology is awesome. But now we're talking about pets.com valuation prices that are just shockingly expensive. History is not going to judge as well. We need to at least see. Let's talk. Agree to adjust our views when the S&P 500 at least kisses its 200-day moving average. Hasn't done that in a year and a half. It'll do it, just like Bitcoin did last week. And don't underestimate what this space is. It's tremendous for trading. Buy low. We got low last week. It was great. 200-day moving average. We got high last year. It was great when everybody got extremely enthusiastic. But I would say allocate into this space, maybe other than Bitcoin as digital gold, is just silly. And I say good luck, because you're investing in things that have, some of them have no value, no earnings, and they're just extraordinarily expensive. And we saw what happened after the dot-com bubble. Yeah, it turned out great. Amazon was great after it went down 90%. So I know you got to interrupt me, Dave, but this is silly. Good luck. When we get that
I'm not interrupting you. I actually agree with you.
I just have to say, yeah, in context of that, Mike, the only thing I would say is that, the difference between the dot-com bubble is that we have like a dot-com bubble every 24 hours in this space. These things, the 12 million that you point at don't need like an entire bubble to burst, because they're their own bubbles. They're built that way, right? They just go up, they're down. So those 12 million things have already gone to zero, which is why CoinMarketCap has to delist them. It's not like most of these assets that you point to have retained value. Even the 35,000 that are listed, I would venture most of them are over 90% off their all-time highs.
So let's look at existing trends. And we pointed this out before. What stops Bitcoin dominance to going to 90%? What was the last peak? The 74%? We need to see the normalization in the stock market. That's the most expensive versus, market capital, the GDP in our lifetime. It's over 100 years. And we're just starting to find the realization of what really pumped it up. Massive excessive spending from U.S. governments being shut off. It's just this is silly, but that's why
that's not true. That's the first thing you said.
I mean, definitely part of it. I mean, what started Tesla? Tesla's part of a government plan. So let me just point out the valuations I see from a macro standpoint. I think copper has peaked. I think crude oil has peaked. I think corn has peaked. I think natural gas has peaked. I need good reasons for them to go higher. And I see gold continue to appreciate. But if you look at just two key facts, gold is the most expensive versus U.S. Treasury long bond in our database going back 30 years, and same with the stock market. So that's why I keep tilting over to where's the value, is maybe things like that I've been wrong on for 2 years just catches up to the yields in the rest of the world, maybe like China, 1.76. A little bit of normalization. That's what I'm worried about, is that's the next big trade. And then you might have a chance to dip into some of these cryptocurrencies that are still, I see, actually Ethereum was great. It bounced from 2,000, maybe gets to 3,000. But to me, eventually the range risk is it goes down.
So you said three things there. There are three pieces of information that are denoted there. I actually agree with two of them on the edges. It was not the U.S. fiscal dominance that's doing it. It's the printing of money and the denominator, right? And we always have to talk about the denominator, the amount of dollars in circulation, writ large. But let's not quibble about that. I agree on a lot of what you're saying, but there are a couple of things here. Number one, and most important, my thesis, which I have been trumpeting, is that from Trump's election, is that crypto assets that can provide economic value to their holders, or at least have a roadmap for doing that, are the ones that are going to attract growth, and the ones that don't are going to become pets.com. It is that simple. In the internet bubble, we saw this, and for people who don't understand, the amount of excesses was insane. You're talking about companies that Swan Valley snowmobiles going to net taxi, being worth hundreds of millions of dollars, from hundreds of thousands of dollars instantly. We saw this, and a lot of things happened. The other thing that happened is people learned how crazily stupid they were for dumping companies that actually did have a path to profitability, and they allowed the Amazon holders of the world or people to buy in at the bottom. They sold that. I can't tell you how many people I know that said, I can't believe I sold my Amazon down 90% or down 50% or down 80% when it then went up by 1,000%, 10,000% afterwards. People learn. They don't fight the same war. They fight the last war. People understand. And so, we keep waiting for crypto to go down. My theory is the reason crypto insanity. I mean, when I look at CoinMarketCap, I'm not different than Mike. I see, whatever. Let's pick, stuff that makes no sense to me. I see, and I'm going to rile people up, I see Bitcoin Cash at $6.7 billion. I don't know if there's ever going to be a utility for Bitcoin Cash, right? I see, I see things like, let's go through, where are we? Where's the various, you have to go down pretty far to start finding non.
I mean, you
It's
get
got
meme
8
coins. I mean,
billion
you've got meme
names.
coins. Trump
you got
tokens at
billions of
35.
dollars in meme. You got to go on memes for a second because it's hard to find them now. So Shiba Inu is still $8 billion. Unless they can resurrect Shibarium and actually do something, I don't see why that's worth $8, much less $8 billion in the end. So I know that I'm offending people. I don't really care. I mean, people want to yell at me about their project. That's fine. But you look through these things. If Pepe doesn't turn into a media franchise and with the ability for the token holders to get access to it, it will be zero. And that's the thing about memes. They'll go up, they'll go down, but eventually the music stops because they're fads. Talks about it. I agree with that. And when you look through crypto, we know that of the 100 or so layer ones that are on that list, that probably a handful will have value. Now, and we don't know. Because if you were looking in 2000 and you were thinking Yahoo or Lycos, these are names that people probably have to go look up, or Ask Jeeves was going to win the internet search game. Guess what? The company that won the internet search game wasn't public yet. You didn't even know about it. I mean, smart people knew about it because Google was building. But the fact is, we don't know what these things, and that's kind of your point. That doesn't mean the entirety of the market cap isn't going to be substantially higher than it is today. It means we don't know. Now, when you look at Bitcoin, and so if you believe, by the way, that Solana is going to be the base layer for financial markets, then it's dramatically undervalued. It's not even close to being fairly valued. But if you believe that it isn't, then it's the most obvious short. It's very binary. The only one here which is different is Bitcoin. And this is something that I said this weekend, which is, we've said every time, most Bitcoiners, James believes to the core of his being, just like I do, that Bitcoin will reach a price that's pari passu with the monetary value of gold. We all believe that. We all believe that it will probably go beyond that because for a bunch of different good reasons. Yet we also use words that, well, it can't happen this cycle because it's too early. Right? Am I wrong, James?
No, I mean, it's going to take a while.
Right. It's going to take a while. Now,
but can I point at something? Okay, go ahead. Finish your thought really quick, David.
But the thought is, if most of the sovereign states of the world realize that Bitcoin is something that could go there, isn't that the kind of self-reinforcing thing that could make this cycle much more explosive?
Absolutely. It's the game theory that we talk about, but that has not occurred. And now when you have noise around strategic reserves and what's going to be in there, it kind of muddies the picture for all of the states and all of the sovereigns. And so what are they going to be? It puts it all in the same mix, so that's confusing.
Yeah.
And
I don't see foreign countries feeling compelled because Trump truthed yesterday to go start acquiring Cardano.
It's not about compelled. It really isn't. I mean, look, there's not a lot of supply. I wish that There was one of the persons who responded to one of my posts the other day. I keep wanting to call them tweets, but whatever. One of my posts the other day saying that the vast majority of the selling that we saw over the last, last week, basically was all coins held under 3 months. And
what that way.
Well, I don't know if that's true or not true,
Yeah.
but what I do know is that if more and more Bitcoin is being invested on, if the driver are long-term buyers and that driver manifests, then there is a supply shock coming, because people, the same people who are selling then turn into FOMO buyers on the other side. And that's why our cycles are quite as violent as they are.
So let's talk about, let's go to maybe a different perspective on this. Okay. One thing we know is that, like it or not, Trump, the guy, he knows how to make money. He knows how to lose a lot of money too, but he knows how to make money, and he knows how to manipulate things. Okay. He knows how to manipulate people. We've seen it in a lot of different ways. Okay. So if you just use that as your baseline, you go to first principles, and we talk about game theory all the time. Like, how does this actually happen? How does the United States actually go out there and buy Bitcoin without sending this thing to $500,000 a coin overnight? How does that happen? Like, because the moment they announce they're going to be buying Bitcoin, every single country, every single small country, every single country who has their own fiat is going to, the game theory says they have to follow suit. They have to go along, which means that this could be, just like you're saying, Scott, explosive. So what if, and I'm not saying that I think this is what is happening. I'm just putting this out there as maybe an alternate theory. What if he's throwing all these other coins in there to muddy the picture so they can go out there and be buying Bitcoin without sending it to $1 million per coin and have everybody focused on that one thing? What if
buying it from buying it
they're out there, we're buying everything. Meanwhile, they're really focused on buying Bitcoin. I'm not saying that's what's happening, but
yeah, doesn't all this, in the context of the story that kind of came and went, which is obviously the sovereign wealth fund of the United States, and we've discussed it here for a bit with Lutnick, doesn't all of this make a hell of a lot more sense to put into a sovereign wealth fund than to talk about reserves and stockpiles?
Yeah.
Like with all of this, because if there was a sovereign wealth fund that had, 6 trillion and they could just go do these things, like, how would they even be buying Bitcoin right now?
Exactly.
What money?
Yeah, exactly. So, well, you'd have to fund it, but if I'm an arbitrage trader, if I'm a hedge fund trader, right, then I have to announce in a filing everything I'm doing before I go and do it. I'm going to announce a whole bunch of stuff, so you don't know what I'm doing. I may buy one share of a stock here and one share of a stock there, but I'm going to announce all kinds of things, so you have no idea, no clue what I'm really doing in the background. That's what I would do. And so it would make sense to me for the US government to muddy the picture and say, you know what, we're going to buy NVIDIA and we're going to buy Apple too,
Yeah. I'm going to give a much more simple explanation. I'd like Mike's thoughts on it. My explanation is, as you said before, Trump really knows how to make money. And this is still the Wild West. And his family is going to make so much money in crypto, and he has the power to effectively, legally make sure that happens.
2.0. Yeah.
I'm not, listen, it's great for us, but my most cynical view is always my main view, and then prove me otherwise, not just of Trump, of anyone. But like we can
view, in my opinion, right?
We can see what World Liberty Financial's doing, then we can see the assets that he lists here. I mean, Mike, when we saw, and guys, people are going to defend him. It's fine. It's great. Good for him. He launched Trump and Melania tokens, right? I mean, it's not like we haven't seen the gratuitous grift. So, Mike, I mean, isn't that the most likely explanation outside of all the game theory and stuff? Is that this is a really good opportunity for the Trump family to get exceptionally wealthy for the next few years?
Next few generations.
I just love when people point out, we're going through these issues with Russia and Ukraine right now, point out they have good negotiators. We're talking about Mr. Trump is the president of the United States because he's the most clever man on the planet. I mean, you want to mess with this guy? I don't. His flip on crypto is like, I bow in his general direction. Yeah, it helped you get elected. The thing is right now, though, I'll stick with some of the things we discussed is, yes, he's trying to make the price go up higher based on a promise he made to get elected. He doesn't really give a damn about cryptos except they helped him get elected. Gets the technology and everything, but the bottom line is, we mentioned going pari passu with gold. I pointed out, when I still stick with that 100,000 is the threshold in Bitcoin, I think akin to the NASDAQ at 5,000 25 years ago. To me, that's still the key level for the whole space. And part of that is, I remember the things I wrote about months ago, is you looked at the quick accumulation of ETFs in Bitcoin. It's the same as the ETFs in gold on a risk adjusted basis. In fact, it got a little higher. I'm like, okay, that's kind of done. We see the outflows lately. It's done there. I think, remember, that's done. Underestimate gold is not just a, as Dave points out, it's been demonetizing silver forever, and a lot of central banks are accumulating.
Mike, go ahead, finish.
Yeah, so
I just want to give you
to me,
credit.
this is, I'll stick with that theory that we've had a bounce from good support in the technical market. Thanks, it's great for trading. Let's not underestimate. Be careful with some of the fundamental things I remember hearing in dot-com bubbles and about some other cryptos. And the key lessons of Jeff Booth, the Bitcoiner, is rapidly advancing technology. Our government's going to try to pick winners in cryptos. I'm like, good luck. And within 4 years, when he's gone, it's going to be, the space is rapidly advancing so much. There'll be so many better examples of Solana or maybe even Bitcoin because it's happening so fast. I just look at it as massive excess supply, major hubris, a lot of too high prices, completely dependent on the stock market going up. Good luck.
Mike, what I have to say is, and this is for you and Dave and myself and James, all of us, because I don't know the exact date, but we got to go back. But I think we're all buying each other steak dinners. Because
yeah,
I'm
doing the buying on that one. It's just the fun banter.
This is the Bitcoin. This is the Bitcoin to gold ratio. This is the Bitcoin to gold ratio. I believe it was last March or April, so right around here, probably around 30 on that ratio. And then Trump won. Obviously, it skyrocketed. But you guys Dave bet, that Bitcoin would outperform gold for the next year. You made the other side that bet gold, and I think that even among all this crypto excitement, they're either
right
flat
around,
or gold might be slightly up. So,
yeah,
I just, Mike, you take a lot of shit in the comments over here sometimes because these things take time to play out. But it's important to remember that you're someone who's zoomed out and looks at this, and gold has done just as well as Bitcoin over a year if you take that time.
That's what's happening lately, and I published on that today. The Bitcoin top is less of an island top versus gold. It's less of an island top than it was on Friday when I wrote my article and sent it to editors. But we still have that downward trajectory, and gold ETFs are just taking off. 4 years in a row of outflows. To me, this is the flip. This is the psychological flip, and you basically need a strong payroll number in the stock market to do fine. Otherwise, it's overdue. Now you're seeing it in housing, you're seeing it in sentiment. Maybe it's different this time, and seeing it in cryptos. Now they've had their little bounce. I'm like, good luck, but that's key thing was to remember. I want to point out, let's get to the macro here. I still think Bitcoin's more likely to go to 50 than 150. Here's the problem. Going to 150 means most risk assets go up, inflation, the risk, the wealth effect, the Fed has to tighten. Remember, they stopped easing partly because the wealth effect last year in the stock market was the greatest ever. Here's the bent. The tilt is that has to go down in the Fed's stock. I mean, what's the key things to make the Fed ease? Number one, stock market going down. Number two, unemployment going up.
Yeah, but what if they don't ease and they just come up with all kinds of acronyms to help push liquidity into the market instead?
Yeah, what's the key thing for that to happen? Number one, Dave said it earlier.
Treasuries have to be in trouble.
No, we've learned. Oh, yeah. Okay, what's the number one goal of Mr. Best and Mr. Trump right now is lower yields, lower energy. I didn't even heard him talk about the stock market in a while, but the key thing to remember is we've learned the lessons of too much liquidity and inflation. That's the key thing that's different from any single time we pumped liquidity in the past. Most notably, the biggest pump in history, which was 2020 and 2021. If we haven't learned that lesson, God, it's our fault. But that's
Mike, I think we have learned the lesson, but we don't care. I think that they have learned the lesson, but they just don't care.
We'll see that. So again, we're making judgments. I'm just pointing out okay, let's get back to that 200-day moving average and S&P 500 and see what happens. Maybe
what is that level, by the way? I haven't even checked. What is that level?
So Mike, to be clear, I'm not arguing with you about the lessons. I talk about it all the time because it's awful. It is the predatory nature of the central banks on the lower demographics is abysmal. It's an awful truth, but that doesn't mean that they're going to change the way that they do business. They're going to continue to do what they do because the reward system is set up that way. They're rewarded for it. They're not who wants to crash the economy, tighten liquidity, and suffer the consequence of being blamed for sending the entire global economy into turmoil. Who wants to do that? Nobody wants to do that. The incentives are not there. That's the problem. The incentives are not aligned with the reality of what we need to stop this continual demographic diversion where you've got rich, or I mean the wealthiest who own assets are going to continue to get wealthy. That's just the reality of the system we have set up, which is why
So that's the key point. I'm with you on that. The key point I'm making is when we get just the normalization of the very expensive risk assets in this country, most led by cryptos, the most in history, when we get that, that's when the Fed starts easing. And they're going to fight that battle. It might last a long time. It might start Friday with a bad employment number and unemployment ticking up. But also, what's the Doge doing right now? It's shutting down that massive fiscal excessive spending and waste that was way overdue.
And I think
this is the Doge is contraction, right?
Yeah.
I mean, Doge is austerity of a different design, but yeah.
Yeah, but the question is, are we going to have a slow grind lower because of poor economic news and stagflation, or are we going to have a shock to the system? That's the question. And how quick are they going to react? That's it. How quick are they going to turn off the minimal QT they're doing, which is $25 billion a month? It's nothing. They're just letting treasuries roll off the books. I mean, when are we going to have a new debt ceiling? So, and how much is Doge really saving us in the long run? And how much is the government going to turn around and spend in the background in order to make sure that we continue this charade? That's the question. Is it going to be the central bank steps in and prints money? Are they going to have an acronym because of some sort of financial shock like we saw with when we had Silicon Valley Bank crash and implode? Are we going to? So what is the impetus for them to step in? Is this slow grind lower? If it's slow grind lower, then I agree with you, Mike. Then they'll just start easing, and then everything and we'll have that kind of hardish landing. Or is it going to be something that tips it off, and we have a problem that points to an issue with the treasuries, which would be Silicon Valley Bank? What's that, Scott?
Slow grind lower would be problematic for the midterms. They can't have that. They can't have the stock market just kind of slowly drop for 18 months. And so it's got to be as you said, it's got to be a Band-Aid rip. We got to get it over with so that in 12 months, nobody remembered it happened.
And blame it on the last administration. Because, well, it's obviously, it wasn't something I did, but yeah.
Doge is Band-Aiding ripping right now. I was kind of hoping they would do this. I'm shocked they actually did it the way a true good corporation would do, like my father did in the 80s when he helped save a steel company in Chicago. You got to rip the Band-Aid off right away. And they're doing it.
Yeah. And now we're seeing that the GDP was revised, not just lower, but to negative, right? It was revised down to minus 1.5.
That's crazy. That was the Atlanta Fed, correct?
Correct. So, I mean, there's so much uncertainty, which is incredible that the market is still holding in here with all this uncertainty.
Gradually then suddenly.
Gradually then suddenly. That's right.
Yeah, I mean, look, I just keep coming back to a very simple question, which is when you're investing in, and let's ignore the, XRP. We'll talk about that, probably on Crypto Town Hall. I'm sure Mikkel will talk about it. And let's not talk about Solana, because Solana has a huge supply thing, which is how much of the recently unlocked Solana is going to actually end up on the market right now. I would imagine.
That doesn't worry me.
Yeah, and I'm not worried in the long run. It's a question if Solana continues its ecosystem to become the markets underpinnings, then it's going to be worth a lot more. But Bitcoin, the fact that most of the people who are long-term investors in Bitcoin believe it is undervalued by 90% is very different. I don't think there is a human being on the planet that could look themselves in the mirror without laughing and say that they're buying the NASDAQ at what they think is a 90% discount to fair value in today's dollars. Nobody. That is a massive difference. So look, Bitcoin is trading on technicals. Last week, we saw a breakdown. And I'm very curious to see what Peter thinks. Bitcoin just dropped below, dropped below 90,000. It looks like, we're going to reassert the technicals from last week. As long as technical traders are in command and there's no supply, there's no demand coming through and follow through, then we're going to be very choppy for a while. And that's fine. I mean, I basically said that, that 80,000 low was a tradable bottom. I still think it's a tradable bottom. That doesn't mean I think we're going straight up to 150, 180 or whatever. I think that, this stuff needs to play itself out. But understand fundamentally the people who own most of Bitcoin and the ones who are accumulating it think it is over 90% undervalued.
So
And
Dave, I gotta laugh at that.
That is different.
I gotta laugh at that statement, because if you own something, of course you think it's undervalued. Duh. Come on, but 90%?
No, Mike, it is. I have never bought. I've only bought one stock in my entire life that I had a mental price target of 10x its value, and guess what? It 10x'd. And it had something to do with if a particular law changed, this company would be worth something. And I had people telling me this law is going to change. It was Italian law, and so I had friends that had good ins in the Italian government. It was one stock that I knew about that made money, and it was 40 years ago. Probably today that would be called insider trading, but back then no one really knew anything. But other than that, I think buying Bitcoin now at under 100,000 is the moral equivalent of insider trading, knowing what we know about where values and trends are. I would not say that about any other asset. It's a much higher conviction, and people ask me about this all the time. That dynamic changes what you're saying. You may not like it that way, but it is something different. And I don't think that there's any danger of a new technology coming involved to take over Bitcoin. Either there will be a decentralized digital asset that will be a global store of value, or there won't. The notion that something new is going to come along because it's, quote, better tech, it's not about tech. It's about critical mass. It's about network effects. It's about a network that is hardened and hasn't gone down in 15 years. It's about a hash rate and a network strength that continues to go up. It's not the same thing. And so, yeah, I sound like a Bitcoin maxi when I talk about that as a store of value, but you need that backdrop. Now, does that mean that things that technical trading won't dominate? Of course it will dominate. On the margin, liquidity rules. It always has. It always will. But that's why God candles can happen. People were calling what happened yesterday as a God candle. I actually was laughing at that. So other people said, oh, it was a short squeeze. I was laughing at that. No, what it was the momentum trader saying, oops, I was caught flat-footed and it went the other direction. What we need to find out is where is the actual bid right now, and can they actually get supply at that level? And if the answer is yes, it's going to stay around those levels or scale back in. If the answer is no, then it's going to start going higher. We don't know the answer to that. And I said that very clearly. I still think that's true. I didn't say 90 was a tradable bottom. I said 80 was a tradable bottom. And that may very well, and it's tradable, right? We're talking about the long run.
Yeah, I mean, at the end of the day, Bitcoin slammed right into resistance at 95,000 and dropped. If you looked at the Solana chart, it slammed right into resistance at like 180 and now dropped. So yeah, I mean, it was a huge move, but still within sort of this technical range. Nothing notable happened for price that would give you the idea that you're going straight to all-time highs again. But oh my God, I can't believe it's 10 o'clock. There were so many things I wanted to discuss. I just do want to highlight one of them that I think is important, which is that BlackRock adds its Bitcoin ETF to model portfolio for first time. It just kind of got lost in the news of all this. James, you gave this, maybe you could just kind of, to me, this is like massively important just as a step. It's not like something that's going to send price.
Really quick. I wrote about it in actually a full newsletter this weekend. So anybody who's watching it, it was a free newsletter this weekend on my information list. But there's difference between people have been saying, oh, BlackRock's the one who's buying Bitcoin. BlackRock buying Bitcoin for the ETF is buying Bitcoin for the people who are buying the ETF. They're not buying it for themselves. That's really big distinction to be made here. This is different. This is BlackRock putting it in their model portfolios for all the RIAs and portfolio managers who use BlackRock's templates to add to their model portfolios. These model portfolios have about $150 billion in them, which means that anybody who's watching these model portfolios, if the model portfolio has alternative assets in it, then they're saying you should have a 1 to 3% allocation in it. And that could be, or 1 to 2% allocation. So that could be as much as $3 billion of buying pressure for Bitcoin ETFs, and especially the IBIT, because IBIT's the one they put in their own portfolios. Obviously, it's their ETF. And so it's just a little bit different this time. It actually is BlackRock saying to buy it, but it still isn't really BlackRock buying it. It's the managers who follow those portfolios. So, but yeah, it's interesting, and it is this is real. This is actually for people saying, BlackRock's the ones buying your Bitcoin when you sell your ETF. That's not really what's going on. Or BlackRock's out there buying the Bitcoin. This time it's kind of true. So that's a distinction. And it's a big deal. It's a really big deal.
Yeah, Mike.
So just one takeaway. We still have a pretty significant strong stock market this year. Total return S&P 500 is up 1%. But TLT's up 6%, Bitcoin's down 4%, gold's up 10%. I think those are trends just getting started, partly because, yes, I've been wrong for 2 years on bonds. Lost my hair talking about buying bonds. I think that's going to be one of the best performing assets this year. Good old TLT.
But they're still not even down in that time. They just didn't perform
Exactly. When you
particularly
get that
well,
stock
which is
market-
interesting because I've been holding TLT since '84 when it was the bottom, and I did that even publicly here. We talked about it. I'm still up. I haven't even thought about it.
Yeah, that's the key thing. At some point, we're just due for a normal, 20% back up in stock market. You don't make a record high for 5 years. God help us. Stuff that used to happen. And this market is so due for it's normalization, mean reversion. Bitcoin's just one of the best leading indicators there is. And people always justify different reasons for it going up. I think it's peaked at 100,000. It's more like go to 50. It's not a big deal in the history of Bitcoin.
And the last story that I just need to highlight quickly is that there's going to be a crypto roundtable at the White House on Friday. So for anyone who didn't think that we had enough insanity for crypto news from the White House, you got that.
Look,
yeah, I guess we'll have to move it to Crypto Town Hall. Dave, you're dying to say something, so go ahead.
No. Look,
I can see it.
Well, I'll save it. I'll save it for next week. Let's let this week play out. See all the foolishness.
Yeah. What a week! It's so funny that the market
tight.
opens and we drop. Yeah, here we go. Very
Strap
very
in.
exciting stuff.
I hope
All right,
everybody's
guys,
already strapped in.
Yeah, seriously. I hope you at least own some Bitcoin already. Come on. Anyways, guys, that's all we got for you. We will be back, of course, next Monday. I'll be back tomorrow with Andrew and Tillman and the Arch Public crew and heading over to X Spaces in 10 minutes. Thank you, gentlemen. Always a pleasure. I think I'm still buying the stakes, to be honest. We just got to get us all in Miami at the same time. Maybe we should do a Macro Monday dinner and invite our fans.
That would be fun. Let's do
think
that.
that would be
Let's
fun.
plan
Set it up, man.
I'm going to talk about that. I say these things that I forget about them because I have ADD, but it's a good idea. We should do that. All right,
They
guys.
won't let you forget about it in the comments, Scott.
That'd be awesome, man. Just comment if you want to come. See you in Miami. Bye, guys.
Let's go.